level. Then we come to the third thing, management decision making. At the end, you should be able to use management information from various reports to support decision making. So remember what I told you here. This is about variance analysis. So who we are, when you compare your budget against your actual to get your variance, you should now be able to use that information to help management to make what? Various decisions in the organization. Then the fourth thing, short-term decision making. If you look at the list that we put there, the examiner said that at the end, you should be able to use management information to apply decision-making techniques relevant to short-term decisions. Relevant to short-term. So these are all decision-making techniques. So in the short term, how can we use that to be able to help the company to make those decisions? Then certainly, we look at the long term, identify, describe, and calculate relevant data for use in the long term, decision making, and comment on their applicability. So this is why I spoke about investment appraisal, and we'll be looking at it later on. But anybody with an idea on investment appraisal? Like you studied it somewhere? You have some ideas, right? The internal rate of return, the payback period, net present value. So those guys, are you getting it? So that's what we'll be doing extensively here. So here we are looking at, okay, if the business is making a decision about an investment decision, how do we appraise that decision to find out if the decision is worthy to be made or can be undertaken? Then certainly the last one, performance evaluation. You should be able to identify and explain key features of effective performance management system. Key features of performance management system. So these are what you have to understand about the syllabus. Any question before I dive into our first discussion? Any question? So Emmanuel, this will guide you in using the book. Are you getting it? So you know the things to cover and the things not to cover. Okay, so let's begin with the discussion. Before I come to the issues about cost control, cost reduction, business ethics, let me start with something that is critical to our study, and that is going to be Introduction to Management Accounting. Introduction to Management Accounting. Now, when it comes to management accounting, basically what we are looking at is how we can provide information to management in order for them to make decisions. At this level, we can talk about differences between management accounting and then financial reporting. What are some of the differences we can talk about when it comes to these two fields of study? Financial reporting and management accounting. Real quick. We were in revision. We're in revision. Examiner not say revision. Differences.
Management accounting is meant for internal use.
Okay, so this is for internal purposes or internal use, and this is for external primarily, even though it can be used internally. What else? Come on.
There's a law that governs the preparation of
So financial statements are prepared according to generally accepted accounting practices, but here no gap. Free bonto. What else? This can provide information in the short term in relation to like information on daily, weekly, right? Or maybe monthly or quarterly. But this guy provides information usually on a yearly basis. Are we getting the idea? What else can we talk about?
Do you say there's no format for just like this one?
Excuse me?
Yeah, we are saying that this one is it has a well-structured format.
Okay. But isn't that the same as the gap? Because the gap tells us both the principles and the format he has to take.
Okay.
Are you getting it? So we will fuse that into that point. We fuse that into that point. What else can we talk about?
What about profits and decision making? Maybe
Okay.
main focus is mainly on decision making.
Okay. So to enable management to make specific decisions, right? To make specific decisions. But this one relates to, even though this is used for decision, this has to do with overall profitability of the company. Okay. Then MA has both, or can do both budgeting. It's both historical in nature and forward looking. Are you getting it? So MA is historical in nature and forward looking. FR is purely historical. Right? So these are some differences we can talk about in relation to management accounting and financial reporting. Now, this is a controversial question that the examiner can throw you on board. If that is the case, by law, now, another difference is also about legal regulatory requirements. By law, companies are supposed to, especially public companies, are supposed to prepare their financial statement, have them audited, and have them published. So by law, you are supposed to have an accountant in your business. But you know, so there is an argument that if that is the case, then there is no use for management accounting. Companies can just employ financial reporting or financial accountants and focus on their job. Will you speak for the motion or against the motion, and why? That is a question the examiner can throw at you to just see. This is actually a JSS. Sorry, did I say JSS? An SHS question. What would you say? If by law we are supposed to have financial accountants, and really that is their role and that is what we're looking for, then there is no need for management accountants. Is it true or not true? And why?
To me, it's not true.
It's not true. So why?
You know, the skills that you need to prepare management accounts is a bit different from, because they focus on more or less like figures.
Okay.
These people, they focus on decision making.
Okay.
So for that matter.
So you think we need them as well in the business?
Exactly.
Right. So from what you're saying is like, you know, management accounting looks at both information and financial and non-financial information. That is why management accountants will do performance appraisal, employees efficiency, machine efficiency. But the financial accountants cannot do that. Hence, we cannot say we should boycott the management accountant, because really, to really grow as a company, we must know our efficiency and our effectiveness level, and that can be provided only by the management accountants. What else? What else? If you are against the motion or for the motion, let's sack them so that from today we stop learning any. Yes, what else? Come on.
In our public sectors,
Yeah?
we have MAs.
Certainly, we are supposed to have MAs. Because MAs estimate the cost and they help the company in budgeting. Are you getting the idea? Because they can future, they can do that thing, but FR cannot do it. So really, they are in the public sectors as well. They are in the public sector. So for budgeting purposes, we don't need only what? The FR guys. Because the FR guys, their knowledge is only they see for receipt in the bra. But MA is like they basic. So we are looking into the future and trying to estimate the cost. So really, if we look deeper, the role of the management accountant is as equally as important as the management financial accountant. Especially if it's a manufacturing company, then it becomes critical, even more critical. So if it's a manufacturing company, then we need to really look at the management accountant very well as compared to the, as we will look at the financial accountant. So that is what we can talk about in relation to the difference between financial reporting and management accounting. Then the next thing that we're going to be looking at is, okay, what is cost? Because primarily everything we're doing in management accounting has to do with the cost of something. So what is cost? If I say it cost me $100 to whatever, buy this tripod, what is cost? Abrana Yasha say I don't know. So what is cost? Come on.
Expenditure or expense made on an item.
Okay, the expenditure or expense made on an item. You have something else?
Yeah.
Okay.
The price paid for an exchange of an item.
The price paid for an exchange of an item. So the buyer, to the buyer, it becomes the cost of the product. Yes. So we can define cost simply as the amount of expenditure incurred on an activity, a process, or an undertaking. Okay? So cost can be defined as the amount of expenditure incurred on an